Hello everyone. Here in US, prices of gold and other precious metals like silver, platinum and palladium were trending lower, despite all the news about inflation and geopolitical tensions. But did you know that in most places outside of US, Canada and maybe few other countries, gold actually performed really well this year? And I really think we will see a similar performance by gold against the US dollar before the end of this year. Let's talk why I think so. Today we will take a look at a couple of countries where prices of gold are rising and rising pretty substantially. We will talk about reasons for that as well. Then we will follow up on forecasts for prices of gold and silver here in US. I can't list all countries in this short video, we will only focus on two that better represent the trend. Let's start with prices of gold in Eurozone. As you can see on the chart, prices of gold shot up from €1588 per ounce at the beginning of the year and are trading at around €1,700 per ounce. This is a €100 or just over 6% price increase. It might not seem as much, but let's take a look at stock market performance during the same time frame. Europe 600 stock index went down by over 10% from 498 to 425. But more important metric is the comparative performance of euro versus US dollar. At the beginning of the year, price of $1 in euro was 1.13. Now it's just above a parity with euro. It's an almost 10% decline for euro as measured in US dollar. If you held all your assets in euro-denominated stocks, you would have lost 10% from the decline in equities, plus another 10% due to the euro devaluation against dollar. A 20% drop in purchasing power. Gold, on the other hand, would have gained you a 6% return in euro, mitigating substantial portion of 10% drop in value of the currency. By buying gold, you would have lost only 4% of your purchasing power. And if history is any guide, gold will be one of the first assets to rebound with a rally judging by the gold performance after last few recessions. Not to mention that gold is one of the very few liquid assets in a crash. If you needed to liquidate for any reason during stock market drop, your losses would have been a lot less drastic. Now, no one should hold all of their assets in one basket. Precious metals are volatile and might trend sideways for years, as we have seen. I use this example just to illustrate the point. Gold performed really well when measured in a local currency other than a dollar. Example of gold's behavior in an environment of the declining euro is important because it will help us to visualize some scenarios when we get to the possible outcomes for the gold in US dollar later in 2022. Euro is not the perfect match for the dollar, but it is a comparable approximation, just of a smaller scale. Let's take a look at another example from across the globe. Japan. This example is even more instructive and maybe even more important for our discussion about the gold than euro. Let's look at some facts and then we will discuss the situation there. I believe scenario playing out in Japan over the next few months will be a blueprint for Europe and US in the near future. I will explain importance of Japanese economic policies and their connection to the European and US markets later in the video. As we can see on the chart, gold, priced in yen, went up by almost 20% since January 2022. Japanese stock market, despite all the volatility, lost a modest 10% since January. But if we compare Japanese yen against US dollar, you will see an impressive drop in the value of the Japanese currency. Almost 20%. If you held all of your assets in yen-denominated stocks, you would have lost an impressive 30% of your total purchasing power as measured in US dollars. Not a good place to be. Granted, this loss is only this substantial when measured against dollar, but it's very impressive still. Your investment in gold would have completely protected your purchasing power. Yen lost 20%, gold gained 20%. Gold would have completely protected you against any losses due to the currency devaluation. Perfect example of the role of gold in your portfolio. It will not make you rich, except in the situations when you have a market euphoria. As we know, markets are not always rational. If buying frenzy and FOMO ensues, real values can be overshot by a lot. If you can time it right, you can make a lot of money. For most of us, playing tops and picking bottoms is just gambling, so I would consider gold more of a safety measure and not a means to get rich. Now let's talk about why paying attention to the situation in Japan is vital. Understanding of Japanese financial situation is very important for the rest of the world, especially for US and EU. Japan is a special case. We can trace current fiscal and monetary policies of the West back to quantitative easing experiment which started in that country. Well, this is not a completely original idea. Many countries and government throughout history resorted to printing money, we just call it a fancy word QE. Today's QE is obviously a more sophisticated scheme than first experiments with paper money in China centuries ago, but for all intents and purposes, it's just another form of uncontrolled increase in unbacked money supply. It was done many times before, and I see no reason to suspect that this time it will be different. Today Tokyo is one of the most indebted countries in the developed world, with endless rounds of QE. If you go back into the Japanese financial crisis in 1990s, you will find a lot of similarities to today's situation in EU and US. Japanese economic boom in the second half of the last century ended up in a series of huge asset bubbles. Does this sound familiar? So instead of going through the pain of deleveraging, Japan have chosen to print money to paper over the crisis and avoid recession. Again, does this sound familiar? Now Japan has enormous debt levels and stagnant growth. West is not quite there yet, but our budget deficits and debts are on a scale never seen before, so it does look similar again. US and EU adopted the same rules of the game as Japan since the dot-com bubble. Now we are following Japan by a decade. That's why I believe what happens in Japan will be a recipe for US and EU in the near future. Honestly, if I lived in Japan, I would be buying gold with both hands. This currency is primed for a major trouble. I am not a financial advisor, and nothing in this video is a personalized financial advice. I am just looking at the current financial situation in this country with amazement. Now, as promised, let's talk about prices of gold in US. As we all know, prices of gold were trending sideways for a while against the popular expectations of higher gold price. The reason is very obvious: strong dollar and rising interest rates. The same factors that damage euro and yen. As US assets become more attractive, investors from Europe, Japan and other countries are flocking into US financial markets. Would you prefer to hold a 10-year Japanese bond with 0.25 yield when you can earn 3% on strengthening dollar? Probably no. Well, for most of us, moving assets between countries is a mission impossible, but for say Japanese insurance companies, shifting assets between economies is a business as usual. And here lies a danger for the US dollar. As soon as other central banks get more aggressive with rates, investors will have more choices and the inflow of capital into the US might slow or become negative. Given the high inflation and deficits in US, all that drives dollar higher is interest rates. By some estimates, US is approaching the ceiling for its interest rate hiking cycle, and if economy slows and unemployment rise, Federal Reserve will have to ease or pause. That will weaken US dollar, and scenario we are seeing in Japan, EU and other countries will play out in US. Gold soaring and dollar will sag. Here I would agree with the forecast by Goldman Sachs that by the end of the 2022 we should expect a healthy rise in gold prices to a possible $2,500 per ounce mark. This is it for this video. Thank you for watching. Please subscribe and like if you found this video useful or entertaining. I post regularly and would love to see you again when new videos come out. Until next time.